The ongoing invasion of Ukraine is not only impacting international economies, but international markets as well. This war has introduced uncertainty to a market that has already been shaken up by the pandemic. Even though the initial drop in the markets during the onslaught of the Russian invasion has already bounced back from the start of the attack, investors might be concerned about their portfolios during this uncertain time. Joining us now to give us an idea of how the markets will continue to be impacted is Brendan Caldwell, Director of Caldwell Securities Ltd. Brendan, welcome back to Forum Daily.
Thank you, Nima.
Now, Brendan, our thoughts are with the people of Ukraine. We're seeing a lot of loss there, but today we are here to talk about the markets. So let's start with how the stock markets respond during acts of war.
It really varies. The stock market is in this respect as mercenary as people think it is. If the act of war, it is perceived as going to have a big impact on business, the decline is deeper and the recovery period is longer. But if the market perceives no great threat to commerce, then, it's business as usual, sometimes with little or no correction. It's almost cynical in that respect, certainly utilitarian and perhaps even mercenary.
Now, taking a look at previous acts of war, historically, what has the recovery period been?
It really varies. So the longest in modern times is when the Japanese bombed Pearl Harbor. It was, I think, 242 days, something like that, for the market to bounce back. But then that's when America well and truly knew that it was at war. But other things, including, and again, I would say cynically perhaps, but including the Russian invasion of Ukraine, there was little or no reaction, and the market bounced back almost instantaneously. I think the benchmark for my lifetime is the September 11th attacks on the World Trade Center, where I think it took 42 days for the market to get back. And by the end of that year, the end of 2001, the market was higher than it was the day before 9/11. So it's really the market's assessment on how much is this really going to affect the world's economics, the America's economics. So it matters more what's going on in business than the short-term political act of aggression, terrorist or war action. It's business first and foremost with the markets.
Mm-hmm. Well, taking that into consideration, how worried should investors be with some of their investments?
Well, the funny thing is that it's always the exogenous shock, the black swan, the thing you don't expect to happen that gets you on a clear Tuesday. So that the COVID pandemic was not really expected, not like this. We've had pandemics before and nothing really came of it. We had SARS and MARS and different ones, swine flu, and that really didn't affect things. So that this came was the first time in 100 years that we'd had a real full-on global pandemic that had an impact on economics. So the initial correction was a surprise, and it rarely, if ever, does the market have a massive correction while it's still hitting new highs, which is what it was doing in 2020. Flash forward to the present, all that's known about the Russian invasion in its economic impact is already taken into account. I think it can go one of two ways. Either this escalates and gets worse, God forbid it gets a lot worse, but that would be a new information, or all of a sudden we wake up and there's a peace agreement, or there's been a coup in Russia, or something's happened to de-escalate the events in Ukraine, and then you can see the market go way up. So really nobody has a firm idea of what is for sure going to happen in this situation. We, as you say, do pray, and our thoughts and prayers are with the people of Ukraine right now.
All right, Brendan, just a quick 45 seconds left here, but what would be your last message for investors who might be concerned about their portfolios right now?
Well, I think you need to really have a good look at what you need in terms of cash. Don't have a run on the bank. Don't sell everything, because for all we know, this could do well from here. But if you think you're going to need cash in the next 3 months, 6 months, 12 months for a particular purpose, you may take this opportunity. The markets are very strong, at least in the last couple of days, to take some money off the table that you know you're going to need. But I wouldn't sell everything and run for the hills. Conversely, if thinking this is a good time to invest a little bit, a conversation you and I have had a couple of times. Start with a little bit now, and if it goes well, you add more. If it doesn't go well, add more anyway. So that's my best thought.
Always an informative conversation. Brendan, thank you again for your time today.
Thank you.